Excel accounting practice problem. Create accounting worksheet part number 9. Get ready because we're about to excel with Excel. We are in our Excel worksheet. In prior presentations, we put this together from a clean and blank Excel worksheet, and continuing on here, if you have access to this Excel worksheet, there's going to be 2 tabs down below: example tab, practice tab, example tab in essence being an answer key. Let's take a look at the example tab now. All the way on the left-hand side, we started out with the area that we're going to think about putting our journal entries in for financial transactions. We then created the trial balance with an entries section, so we have this nice, easy look between what happened at the beginning and the end. We created our very long general ledger so that we could see the detail and record detail to the accounts as we go. We then created subsidiary ledgers for the accounts receivable, breaking out the information in the accounts receivable GL by customer. Then we have the accounts payable subsidiary ledger, breaking out the information by vendor. Then we had, in essence, the inventory subsidiary ledger, breaking out the inventory by inventory items. Now, finally, we'll make the financial statements, including the balance sheet, the income statement, and then we'll make a statement of equity. That's where we're at this time. We're going to be focusing in on the balance sheet. So let's go back to the practice tab. So this is the same stuff all the way to the left, and we're going to go all the way to the right, and we're going to have this blank space where there's no financial statements yet. So we want to put it way over here, and we want to make this from the trial balance because I'm trying to put this all in one worksheet. So to do that, we got to get good at hiding the cells, so hiding columns. So I'm going to hide columns. I'm going to hide from column BX. I'm going to go all the way back to the trial balance so that I have my balance sheet side by side with the trial balance, the TB. Putting my cursor on BX column, I'm going to be drag it on back to the trial balance way over here. I'm going to go all the way to the skinny column J because I want to make another skinny column. I want to make a new skinny column. And then we're going to hide those cells, and there we have it. So now, there we go. Now we're in I all the way over to BY. And then I'm going to make this our skinny column. We'll make that the skinny column. We'll make the balance sheet. Now the balance sheet, we could see, and notice how nicely this is going to be set up in that we could just basically highlight these items. We've got the assets, that contra asset being a subtraction to the asset, which is done naturally by the fact that we put it in there as a credit balance because it's a credit, adding up to the 118,375. We got the liabilities, adding up to the 1,600. The equity is the tricky part because the equity is actually kind of part of the whole income statement. Is kind of part of equity. And that's one of the things that we want to get a better understanding. If you actually create the financial statements from a trial balance, you get a much better understanding of how this equity fits into the double entry accounting system. So for this, we want to do it from the ending balance column and not the beginning balance column because we want to see what the impact or changes will be for the entries. So to make sure I don't draw from the wrong column, I'm actually also going to hide column G to H. I'm going to hide column G to H so they don't distract me. And so I'm going to right click and hide those. I get distracted super easy, so I got to do as much as I can there. So now we got this, now we got that. All right. So now we're going to make a balance sheet. So it's going to be a balance sheet. So we'll call this a balance sheet. And then we'll make this black and white. We'll make this black and white up top font group. We'll make that black and white as has been our custom for the headers. And then we're going to have our assets. So we'll start off with the assets. And by the way, we'll reformat this balance sheet a little bit more when we're done. But I just like to make it a different color just for those 2 tabs so that I can see that that's kind of the header and differentiate it from the rest. So then we're going to have our assets. And for the purposes of our problem here, I'm going to make the assets this nice green color to focus on the fact that our balance sheet is going to be made up of assets, liabilities, and equity. Let's zoom this in one more time. I'm going to bring it up, maybe not that far. Well, that's pretty good. Let's bring it up to 145. And then I'm going to make this then green and dark green. So we'll hit the drop down. I'm going to make that the dark green and then the lettering on the light green. So we have that there. And then we usually break out the assets into at least 2 to 3 subcategories, starting with current assets. So let's make the current assets. Current assets. It's going to be a subcategory, which I'm going to indicate by a colon. with the formatting of this worksheet. Now, this isn't like a universal way that you can format things, but this is a fairly standard way to start building your tables in this kind of indentation colon subcategory format. It's really useful to do in practice, even accounting, even like algebraic equations. It's worthwhile to kind of put them down and break them out into a format like this, because that's what you might do if you do a data input type of table, which is often the case if you're doing worksheets and whatnot for things that happen repetitively. So we got the current assets, and then we're going to say the checking account. I'm just going to pull in all the current assets, which include the checking account, the undeposited funds, the accounts receivable, the inventory, and then here, that's going to be the long-term or property, plant, and equipment. Current assets being those that are basically, maybe you could think about consumed within a year, or they're closer or more liquid type of assets. So we're going to say then, I'm going to do this with a formula, even with the wordings of the accounts. This will equal then the checking account. Now, I'm going to include the items with zero balances at this point, because I want them then to be included in our balance sheet as well. Note, there is an issue here that if we were to add accounts as we go on the trial balance, we'd also have to add them over here on the financial statements, but we'll deal with that later. If we have a zero balance in here, I'm going to add it so that if I add something into the trial balance, it'll populate in the financial statements. If we were to make the financial statements that we're going to prepare for somebody else, we'd probably want to get rid of then the accounts that have zero balances. So then I'm going to go down and I'm going to do the same thing here with the undeposited funds. I'm just going to pull that over, equals the accounts receivable, equals the inventory, and so on. You might be asking, couldn't I just do that by doing the autofill feature? And if you are asking that, then yeah, we could do that. I'm going to do that with the autofill. So I could just put the checking account and then just drag with the fill handle on down. And then that pulls it all over nice and neatly. I'm going to make another indentation for these 4 items. And I'm going to do that with this indent by going to the Home tab, Alignment Indent. Being able to use this indent appropriately is really good. Otherwise, you'll end up with worksheets that'll have skinny columns and large columns, or else spaces. People will put a space up front, which is hard to do with a formula. And so it's really nice to use that indent if you get when it's applicable. I'm going to make this a little bit larger. I double clicked on the column to make it a bit larger. Now let's put in the numbers, which is going to be equals to the 100,000. This equals the 0. This equals the receivables of the 2,000. This equals the 4,375. Couldn't we do that more easily? We could use the autofill on that one too, can't we? We can. Let's do it. Deleting this, we're going to put our cursor on the 100,000, cursor on the fill handle, dragging it down, and now that pulls over the assets that are current assets. Then I'm going to put the total down here. This is going to be total. This will be total current assets. Putting this in the outer column now equals the SUM, the sum of these current assets up top. Underline in this item, font group and underline. Indenting this with a double indentation. Alignment group, indent, indent again. So we have a colon indicating that we have a subgroup that's going to be pulled into the inner column, which will then be summed up in the outer column. We then indented it to emphasize that these are the items that are the subcategory. We put them in the inner column, then we totaled them up in the outer column, the total being total current assets, total before the heading name, current assets. That's the typical kind of layout that you can kind of get used to when you're making financial statements and possibly just worksheets in general from, say, formulas that are in an algebraic type of nature. All right, so then we're going to go to property, plant, and equipment. You could call this PP&E, property, plant, and equipment, fixed assets, so on. I'm going to call it property, plant, and equipment. Property, plant, and equipment. Let's make it not cap, plant, and equipment. There we go. And you could also call these depreciable assets. These are going to be long-term types of things. So we only have here furniture and equipment, but you might break them out in different categories. It might be furniture, you might have then equipment, you might have then automobiles, you might then have machinery, for example, and you could have building in there as well as, and then we'll have the accumulated depreciation and land. and then the accumulated depreciation. Also note that we can also have a determination as to whether we want to break this information out. It's not spelled right, is it? Property. We could break this information out by having each individual, if we had multiple accounts, giving us the amount of the cost, and then the related accumulated depreciation, and then the book value. Or we might kind of group some of those together, as has basically been done here. We got two accounts, furniture and equipment, kind of grouped together. And then we've got the accumulated depreciation grouped together for all the fixed asset areas. Now, also note, this is another area where you would typically need some backup support, like a subledger that will list out the equipment, the equipment, actual physical equipment, and the accumulated depreciation related to it. I'm not going to make a subledger for it right now because for a few different reasons. One, it can be kind of complex. And two, it's something that oftentimes you're going to be working with tax professionals, especially if you're a small business, working with the tax professionals in order to do that, because you have to have those subledgers on the tax return in some way, shape, or form. So oftentimes the tax software is where you'll basically use the backup support for the detail that you can then enter directly into the accounting system. So in practice, you might want to set up your system, in other words, so that you have your accounts, equipment types lined up to the standard kind of accounting or tax code types, and then work with your tax preparer to help you with the depreciation schedules, either if you're a small business, keeping them on a tax basis, or tax software usually also being able to calculate a book basis type of method. There's various different book-based methods like straight line, double declining, and so on. So we won't get into that in a whole lot of detail right here. But what we do want to note is that these are going to be long-term assets. They're not liquid, in that I can't really sell the equipment in order to pay my current bills. That's why we're breaking it out into a subcategory of the asset category. Okay, so we're going to say this is going to be the furniture and equipment. The trickiest part of the asset accounts is the accumulated depreciation, because it's what we call the contra asset account. What it means is we got the assets on the books at the $16,000. We put them on the books at cost, and that the fact that we put them on the books at cost is an accrual concept, because even if we paid for cash for the equipment, like a forklift, we put it on the books as an asset instead of expensing it as like forklift expense, which we would do if on a cash basis. Why do we do that? Because this is such a deviation from the point of when we paid for it and when the benefit happens, that even if we're on a cash basis, we're still basically forced to do an accrual thing, which is put that up here because we know that it's going to be impacting multiple time periods into the future. Then we got to estimate those time periods in the future, allocating the cost to the future time periods, expensing them as we consume the equipment. And because it's an estimate, we're not going to decrease the equipment account directly. So you would think the book value would be the net of these two things, $12,000. Why don't I just record the $12,000 in the furniture and equipment account? One reason, because we know it's an estimate, so we'd like to tell people what we paid for it, and we could have paid for it with financing as well, or cash, what the cost of it was, and we'd like to tell them the accumulated depreciation that we are estimating over time, so that they can see the estimates. So that's why we end up with this asset account that's negative. It's going to bring assets down, because it's really the second half of this account. You could combine it into that account. We kind of took the T, made it into a 7 and an R, right? Because now we have two accounts that represent one. All right, so how are we going to report that over here? We could say this is the 16,000. Your choice on the second item is to say, do I want to have negative number here, or do I want to keep it a positive number and then have a subtraction problem on this side? Different people will do different things. I'm going to keep it as a negative to represent and show people that it's a contra asset account. So I'm going to say this equals that number, which is a negative, and then I'll do the total, which is going to be total. This will be total property, plant, and equipment, pulling that to the outer column, and I'm going to sum it up, meaning an adding formula, but then it's going to subtract because there's a positive and negative number, equals the SUM of those two items. So there's going to be the 12,000. Let's do our indentation. I'm going to select these three items, alignment section and indent. And then this one I'll indent again, alignment, indent again. This one I'm going to underline. We're going to go to the font group and underline. So same kind of formatting that we saw up above, saying, and I want a colon here too. Let's put a colon there. So colon, indicating that it's going to be a subcategory. These two indented indicated they're part of the subcategory, also pulled into the inner column. And this one double indented, same name with a total in front of it. And then we put it into the outer column. Now note, the most common error people will have is to say I put this in there as a positive and add it together. And then when you get the total assets are going to be the sum of these two. It will be out of balance. It'll be 126,375 instead of these, which is 118,375. And then you could say, okay, this needs to be a negative or decrease in the assets. You'll get to the right number then. Also note that if you're lucky enough to have set up your trial balance in such a way that it looks like this in something like Excel, then it's a lot easier to double check your numbers, because it's naturally the debits and credits are going to calculate for you with a simple formula. So I could say this minus that, but I don't even have to think about the fact that I have to subtract it as I would if I had them in two different columns. I can just select those, go down here and say that comes out to 118,375. There's the 118,375. This one's going to add up to the 1600, 1600, and then the equities, the tricky one, we're going to take the whole thing. That's the 116,775. We'll talk more about that in a second. We'll get there. So then this is going to be total assets. Total assets. Now in the outer column, let's put an underline here. There we go. Let's then squish these together, and I'm going to put the liabilities and equity on the right side. This is where you got the side-by-side look. You can also put it underneath. That's your choice to do. I'm going to put it on the right side to emphasize the two balancing components of the accounting equation, assets equaling liabilities and equity. So we're going to put liabilities. If I spell something wrong, I'll use the spell check to fix it. Font group, and we're going to make this orange, dark orange, and white. And then we generally have current liabilities again. And also note that if you didn't have this one green up top, you might indent this whole thing like again, because it's kind of a subcategory of the current assets. So I might go assets, indent this whole thing. And then the total assets basically down here is the bottom line number. So let's do that. And then over here, I'm going to say this is going to be current liabilities, colon, for the indentation. These are liabilities that are going to be due within a year. All we have over here is the accounts payable. It is current because we're going to usually pay that within a year. I'll make this a little bit larger here. And this is going to be equal to that 1.6. Now that 1.6, it also is a credit now, but I don't want to use debits and credits. The only reason I put this over here as a credit is because I want to represent it as a negative number, showing that it's decreasing the assets. Over here, there should not be credits on the liabilities because we're not doing a debit and credit thing. Most people not being able to understand debits and credits, but rather using plus and minus. So we're using the double entry accounting system, assets equal liabilities plus equity, instead of debits and credits. So I need to flip the sign to make that positive. So I'm going to say negative of this number, negative instead of equal of that number, simply flipping the sign to that 1600. I'm also going to just copy this down. We could select these two now and autofill that down. That brings in the payroll, sales tax, and then the numbering pulls over as well. Note that if you had something like a loan payable, you might have a current portion and a long-term portion, meaning if something that's due over past a year, then you got a long-term liability. If it's due under a year, you got short-term. You could have a loan where you have payments that are going to happen for a year, which is the short-term portion, and much of the loan that's outside of the year. We won't get into that right now. We might talk about that later, but we'll keep it here. We're going to indent. We're going to go to the alignment, indent. We're then going to say this is going to be total current liabilities, but because there's no long-term liabilities, I'm just going to call this total liabilities. Now, if there were long-term liabilities, I'll indent this 2 times. I would have total current liabilities and then a long-term liabilities section. This is a shorthand way for us to kind of shorten things up and say, I don't need another subcategory here and then one underneath it that says total liabilities, which is the same number. I'll just sum this up as total liabilities because that's all we have, equals the sum. That's the common way you'll see that kind of situation. We'll put an underline here. And there we go. And I'm gonna indent this whole thing again. And we'll indent that because that's the total liabilities that are down here. Then we're gonna go to the equity, most confusing component. You might see it called owner's equity, sole proprietorship, partner's equity if it was a partnership, or shareholders equity if it was a corporation. But equity in general is the same, the same concept with regards to equity being what is in essence owed to the owner. So the equity, we want to squish it together basically in one number. I'm gonna pull this down to like down here so it's close to I'm gonna say cut Control X and put it down here in 11, Control V. So because I only have one account and I want my total to be like lining up with the assets, and that one account is going to be the owner's equity. We're going to call it owner's equity. Now, if it was a corporation, it might be called retained earnings. If it was a partnership, you'd have to break out the owner's equity accounts to the multiple owners because it represents, in essence, their interest that's in the partnership. That can be a confusing component. That's a whole issue in and of itself. But if you think about equity in general, it represents just what is the owner's portion of what is owned in the company. So you can think about it this way: assets equal liabilities plus equity. And notice how nice this trial balance is, because I can highlight this and this. These are the assets and the liabilities. Liabilities are being subtracted from the assets. So this is assets minus liabilities due to the debits minus the credits. That gives us the 116,775. And then if I take the second half, which is the equity accounts and the income accounts, we get the 116,775. So in other words, the top half, assets and liabilities, if I net out the debits and credits, 116,775 needs to add up and match the bottom half, which is really the full equity section broken out between equity accounts and the income statement, 116,775. In other words, I could have recorded this whole data or all the transactions that made this up by only using this one equity account down here instead of breaking out all these income statement accounts. But if I did that, then I wouldn't have the detail of the timing. So this whole thing down here, this whole income statement, is related to the equity section of the balance sheet because it's really breaking out the timing of the balance sheet. Many times when you think about people creating the financial statements, they'll tell you you have to create the income statement first, the net income 24,710, so that you have that information to make the balance sheet, which is kind of backwards when you look at the trial balance, because the income statement's on the bottom. You'd kind of like to make the balance sheet first because then you're working from top to bottom. But if you have if you had a trial balance that's by hand, like you're working with a sheet of paper, that might be the easiest way to do it, especially if you have a very long income statement. But if you have a trial balance that is set up this way in Excel, it's really easy to know what equity is because it's right there. You could just add it up without punching it into a 10 key on a 2-column thing, without doing a fancy formula. You just say that's 116,775. The total equity should equal the whole 116,775. So what I'm going to do on the equity section is I'm just going to say this equals the negative sum, because I need to flip the sign, and I'm going to say the sum of this whole blue area, both the equity accounts and the income statement. Or in other words, you could think about it as equaling this 9265, the beginning balance in equity, plus the 24,710, which is the net income, which adds up the whole bottom half. So that's going to be our, and we'll do that again. We'll calculate that basic calculation when we do the statement of retained earnings. But again, just note the format allows you to do a nice, quick, easy calculation. Okay, so then we're going to have the total liabilities and equity. So I'm going to say total liabilities and equity. And let's actually, I'm going to pull this on the outside. So I'm going to say, because there's only one number, Control X or cut and paste it right there. I'm going to put an underline, home tab, underline, and we'll sum up the liabilities and equity equals the sum of these two. And there we got the 118375. So these are obviously the same number. So we're in balance. You might put a check number underneath it if you can. You could say, I want to take this number minus this number. You get that 0 again. And we could do our same check formatting and say if it's between like -1 and 1, I want it green. If it's outside the range of -1 and 1, we want it red. Let's format paint this green cell and put it right there. So if this was if something was wrong, like this was 17 or something, now it's off and it turns red, giving us that nice little check. Now let's do some formatting, just clean this up a bit. I'm going to make this whole thing all the way across here, black and white. That's not black, let's make it black and white. Then I'm going to center it across, not with this centering because I don't like to merge all the cells, but rather by right-clicking and go into the Format Painter. And then we'll go to the alignment. We'll go to the horizontal and center it across and center that. And then I'll copy this formatting across to the full asset category. And then we'll copy the liability formatting across here. And the equity formatting I'm going to copy across here. And then we'll do our blue and border thing. So I'll select this item. Font drop down. I'm going to make it bordered and blue for formatting's sake. That blue right there, which we've seen before, is in the more colors area. Standard. There it is, that blue. And then we're going to pick this one up. Let's put an underline here. I don't know why the format of that 0 is funny. It's a 0 weird formatting. Let's do that. Underline here. Let's make this blue. We'll go borders and blue. And then this one, we're going to make borders and blue. And then let's just do our spell check. Spell check. I think I could ignore that one. Bow. Yeah, ignore all on that one. Anything else? Subsidiary. Subsidiary is so bad that I don't have any. I'll ignore it for now. Okay, so there we have it. So that looks good. And next time we'll do the income statement.